Concerns about European financial health set the tone for world financial markets overnight. First news out of Greece, the latest poll shows that the largest anti-austerity party would gain around 30% of the vote if the election was held tomorrow. Although this contradicts most other recent polls, what it would mean if it was true would be that that anti-austerity party would have to form part of any government that was actually formed in Greece following the election. Added to this, the European Union executive basically told Greece it needs to step up the pace of reforms in Greece if it's to receive any more bailout money. Without that bailout money, Greece will be broke by the end of June. In Spain too, the news is not so good. There's increasing signs that the Spanish government is having trouble propping up its banks. The issue was exacerbated by newspaper reports attributed to the European Central Bank that they'd actually rejected the Spanish government's plans for recapitalising its banks. Although this was actually denied later in the day, the tone had been set. Looking at equity markets, the Dow had plummeted by around 150 points, and this was followed by most European indices, down between 1.5% and 2.5%. In currencies, a similar story, risk off, a flight away from the trading currencies such as the Kiwi and Aussie to safer currencies. The Kiwi falling by nearly a cent against the US dollar to fall down to around 75.3 cents. A recent report by the Australian Bureau of Agriculture and Resource Economics in terms of Australian food opportunities out to 2050 makes some interesting reading for New Zealand farmers. First off, the paper concludes that by 2050, the real value of food in the world will be around 77% higher than it is at the moment, a compound growth of more than 1%. One of the primary drivers behind this increasing result is China, with around 43% increase in consumption from now. The second place getter is India, with around 13% increase. However, one of the interesting things about India is it's expected to be the primary driver of dairy imports by 2050, with a share of around 60%. The paper concludes an increasing share in terms of market growth for meat, dairy products and fish, which will ultimately drive Australians' agri-exports up by around 140% over what they are currently. Given New Zealand's general preponderance towards dairy and meat products, this has got to be good news for New Zealand farmers if, of course, it pans out.